Thank you all, our investors, shareholders, analysts, and MAIB colleagues for tuning in today. We are pleased to present to you the first quarter 2024 financial results for the MAIB Group. On the call today, we have Giorgi Shagidze, the CEO of MAIB, and Makar Stoyanov, the CFO. Just to attract your attention, these results are consolidated, unaudited financial statements for MAIB Group. Any of the forward-looking statements in the presentation today are based on our best estimates and are not intended to be construed as promise of future performance. To start off, Giorgi will give you a brief overview of MAIB's performance.
Yes, good afternoon, everyone, and thanks for joining our quarter one call. Now, very briefly about the summary, and then we will have opportunity to go in detail for each of the items here. From the perspective of macro, we had for 2023 macro growth of about 0.7%, with the second half clearly much better than the first half. And the GDP forecast for 2024 is varying between 2.5 and around 4%. Inflation for December was 4.2%, and in April was 3.4%. This resulted into the further decrease of the base rate below 4%, which clearly will support the growth for the loan book. From the perspective of our strategy, we reached 634,000 MyBank users with 1.2 million cards. Very impressively, 71% already our deposits and 61% of our loans are granted through our mobile banking. With regards to our financial numbers, results, return on equity for the first quarter was 17.6%. Assets year-on-year grew by 28.4%, with a loan growth rate year-on-year of 8.9%. Again, we'll be discussing each of the points in the next slides.
Thank you, Giorgi. Just to give you a brief overview of how the presentation today is structured, we will start with macroeconomic highlights and the country overview. Then we will go over bank strategy and strategic initiative and performance against those. And then finally, we will give you financial results for the first quarter. Afterwards, we shall open the floor to any questions you might have. You can write your question in chat, or you can raise your hand, and we will give you opportunity to speak. So I will begin with macroeconomic highlights and country overview. As Giorgi mentioned, the growth for 2023 was 0.7%. It was less than forecasted. And the reason was that the last quarter of 2023 came in at 0.2% year-on-year growth. There was a very strong recovery in the agricultural sector, some 30% year-on-year. Some other sectors like IT also showed promising growth, but the growth in 2023 was offset by weak consumption and investments. Transport, construction, and real estate sectors were all negative for the year. Exports have seen a decline of 6.5% year-on-year. However, this has to be mostly attributed to much lower re-exports than in 2022. The key forecasters, among which we include IMF, EBRD, Ministry of Economy, World Bank, and Vienna Institute for International Economic Growth, predict a range between 2.2 and 3.5 for this year. This is also a downgrade of the earlier, more optimistic forecasts. And then the growth for next year is predicted to be 4% plus. Now, discussing the monetary policy. The monetary policy easing has continued. The latest base rate now stands at 3.6 following the most recent monetary policy decision. Also, monetary policy decision most recently lowered the mandatory reserve requirements for banks, which now stand at 29% for local currency and 39% for hard currency. Decrease in interest rates and deposit requirements already translated visibly into lower borrowing costs for end users. And as a result, we saw quite a strong year-on-year growth, especially in consumer lending. Business lending remained sluggish with single-digit growth year-on-year. There are hopes that low borrowing costs combined with economic growth in 2024 will drive business lending volumes higher. Monetary policy easing comes as a response to the decline in rates of inflation. So April reading was 3.5, as Georgi alluded. In its latest inflation report, NBM slightly upgraded their inflation expectations, but they still fall under 5% in 2024. The forecasts for inflation are predicated on energy price stability. This is the key factor, and there are several other factors. So in terms of the local currency performance, it has once again gained against the key reference currencies, and NBM official reserves are holding just a little bit off the all-time highs. So we've seen some reduced demand for foreign currency and significant inflows of external financial aid in hard currency, and these are the two principal contributing factor to the strength of the Moldovan lei. Now, speaking about the banking sector, quarter on quarter, there was a small increase in assets, less than 3%. Year on year, assets of the banking system are up 14%. MAIB share of assets is up strongly to to just about 36% from 32% a year ago. In large part, this is due to the addition of one specific very large corporate customer and its current and term accounts. All in all, MAIB has increased its market share across the board. Now, speaking about newly granted loans, the volume has fallen quarter on quarter in the system, and this can be attributed to somewhat low business confidence in the country. Now, speaking about key events, they can be split into two sections. One is obviously the economy, and the second one is the political. As we mentioned, the economy is expected to grow this year and continue growing even stronger in 2025. However, such prediction relies on absence of any significant shocks to the system. Political news flow is very important this year and the next. First of all, Moldovan government expects to start the accession negotiations by the beginning of July. Then there are presidential elections in October and parliamentary in the summer of 2025. Referendum on enshrining the EU accession into the constitution is scheduled for October the 20th, the same date as the presidential elections. So now we will go back to Georgi to give us an overview of the bank's performance against its strategic objectives.
Thanks, Evgeny. Maybe we start with, again, a brief overview about the bank, MAIB at a glance. You already know that we are by far the largest bank in the country across all the key metrics and numbers, with about 1.2 million customers, 103 branches, about 17,000 POS terminals with the banking leasing operations in the country. Number-wise, we are around 3 billion in assets and already 425 million euros in equity. Main shareholders, 41% belongs to HEIM, a consortium consisting with EBRD, Horizon Capital, and Invalda. 14 individuals have about 26% of the bank, and the remainder belongs to about 3,000 individuals. If we move on to the next slide, this basically summarizes our strategy. Just to refresh, we put the customer at the center of everything we do, which focusing on customer experience, delivering the new products, services, intuitive mobile application, and so on. So that's one pillar. Digital is the second one, and then we'll be speaking about digital achievements on the next slide. Focus on payments, where we have by far the largest market share in the country, and we continue the new branch 2.0 strategy implementation in the country, transforming our branches into more outlets to consult the customers how to use our digital channels more effectively. If we move on to the next page, these are key selected operating highlights. We basically continue diversifying our funding sources. In Q1, we signed the agreement with EIB for 50 million loan borrowing, which is a standby facility for us that we can utilize anytime we want to further accelerate the growth. And 44 million guarantee for our SME customer loans, which supports our SME strategy to continue strengthening our position across the segment. On the right-hand side, you see our initiative that we did in first quarter, arranging the second Moldova-Romania capital bridges in cooperation with Bucharest Stock Exchange, Woods, Raiffeisen, AmCham, and EBA. This was a big success, bringing in one room all the relevant politicians and decision makers of the two countries, along with all the market participants in Bucharest, and international potential investors who specifically traveled to Romania to attend this event. And I'd like to thank everyone involved in this with us. If we move to the next page, here is the summary of our digital initiatives. Again, we are proud to have achieved 71% of our deposits and 61% of our loans or have been granted through mobile banking. These are the best numbers for the region for the traditional banks, and we are proud that we achieved these numbers. You can see the growth of the mobile banking users on the top left-hand side, 64% growth in mobile banking users. On the bottom right-hand side, you will see the MAU-DAU numbers with 65% of monthly active users and 36% of daily active users throughout our mobile app. Next page. We have various initiatives that we are flagging and highlighting. This quarter was very successful in implementing and launching local currency instant payment, where we basically process more than 40% transaction in the local currency instant payment. We move on through the implementation of our mobile banking and new mobile and internet banking for SME customers, and Q1 here has been quite a game changer, because now up to 1,000 customers already use this new mobile banking and internet banking. Again, we target to basically roll over all the products in these applications until the year end, and this application is much more intuitive, user focused, and we basically try to help our customers to achieve their goals easier. You can see in the middle our upgraded digital payment facilities in the buses in Chisinau, and that is already with the next stage facility are offering customers convenient services. If we move on through the summary of the financial results, all our initiatives basically resulted into the numbers in Q1 of the net profit that grew quarter-over-quarter by 50% and 2.3% year-on-year. We know that the interest rate, net interest margin, decreased rapidly year-on-year from 6.4% to 4.4% in Q1 2024. However, it is stable quarter-over-quarter. You can see 4.5 and 4.4 on the top right-hand side of the slide. Nevertheless, despite this decrease year-on-year of the net interest margin, our profit did still increase. You can see it on the top left-hand side. The profit was 349 million lei in Q1. Return on equity was 17.6%. Cost to income was 54.8%, and we continue operating on very strong liquidity coverage and capital adequacy ratios, as you can see on the bottom middle and bottom right-hand side of the slide. That's very briefly. Makar will continue explaining this in more detail.
Yes, indeed. Let me a bit elaborate on the drivers behind. So if we start with the balance sheet items, we see a strong and sustainable growth on both loans and deposits. For instance, in Q1 versus Q4 last year, our loans increased by close to 3%, year-on-year by close to 9%. The main drivers behind, there are two. One is very strong growth on the retail loans, and also a good performance of SME business, legal entities, especially on the working capital. At the same time, the corporate business loans stood approximately the same level, with some decrease in Q1, which is quite seasonal. Now, if you look on the deposit side, you see also strong increase. Again, here we see strong performance across all the business lines, be it corporate, SME, or retail. Important contribution to overall increase year-on-year, close to 35%, or a quarter close to 11%, is also from the important big corporate client, which accumulated important big amount of the current accounts or the cash. Again, we have an important sustainable improved of the market share performance of the loans from 37% a year ago to 37.7%. And if you look on the deposits overall on the all the retail and legal entities, we increased from close to 32% market share to 36.7% market share. Now, if you go on the next slide, As was mentioned a bit earlier, we have a strong, good sustained performance on the net profits, despite the challenges faced or the decreasing interest rate environment. If you look on the year-on-year, it's plus 2.3% to 349 million. If you look quarter-on-quarter, is close to 50% increase. And that is in the context also of the ROE, 17.6 increase versus last quarter, slight decrease versus a year ago. And ROA 2.6%, the same dynamics, important increase versus the fourth quarter, while we have slight or decrease versus Q1 2023, which I will elaborate a bit earlier. Now, if we look on the quarter-on-quarter, important contribution was also from the ACLs charges related to the loan portfolios. We had an important big client recovery on corporate side. If you go to the next slide, you can see here, I will start with net interest margins. It went down from around 6.4% a year ago, and around 4.5% in fourth quarter to around 4.4. So what we see downward trend, but at the same time stabilization around 4.4, 4.5%. And despite the decrease in net interest margins, our net interest income has increased by 4.6% on quarterly basis, though it's down by 15% on the year-on-year basis. So we managed to keep it under control and steer our loans and deposits business such a way that the decrease in net interest margins had a manageable impact on the net interest income. Important to highlight that the main focus was on managing the NIM, and the decrease in the yields on the loan side was managed also by important decrease of the cost of funding. You see from 4.7% a year ago to around 2.5% in last quarter, so important decrease, close to like half. Despite that, we see yields on the securities went from around 10.6% or 11% to 6%, while yields on loans, which are our main source of income on the asset side, went only slightly down or relatively slightly down from 11% to 9.6%. If you go to the next slide, on the non-interest income, we see around 10% decrease overall quarter-on-quarter, but 20% increase year-on-year. If we look, the main driver on the decrease of the quarter and increase on the yearly basis, it's from Forex. So we had important increase in both volumes and the spread for Forex transaction in Q4, which we have felt in Q1 2024. But at the same time, if you compare to the year ago, our Forex has increased. If you look on net fees and commissions, it consistently increased both versus last quarter of 2023 and versus the first quarter 2023. You see plus 17%, 17.3%, and quarter-on-quarter, and 8.2% on yearly basis. And the ratio of net fees and commissions versus overall operating income has improved to 15% last quarter in Q1 2024. If you go on next slide, when talk about operational efficiency, as mentioned a bit earlier, we have faced last year's important increase of the inflation, then decreased to around 3.6% last month. And despite those spikes in inflations, our operating expenses are minus 3% on quarterly basis, and around the same, or minus 0.7% on yearly basis, year-on-year. Again, we kept under control our operating expenses. The important driver was adjustments or kind of bringing this adjustment to the cost of the personnel, like salaries and so on, to ensure that people are managing that increase of the inflation, the cost of living. But at the same time, we managed to keep our operating expense under control by working on other operating expenses, which we have decreased on quarterly basis by 3% and 0.7% overall. Now, again, despite those good, strong management of the operating expenses, our cost-to-income ratio deteriorated 4.8 percentage points on quarter-on-quarter basis and 3.1 percentage points on yearly basis. The driver being on the decrease of the interest margins on net interest. Cost per assets, it's manageable, it's stable in Q1 versus Q4, 0.8%, and a bit lower, improved if you look on the Q1 2023. Now, if we talk about the quality, it has improved versus 31st of December and versus 31st of March 2023. We had important recovery of one of the corporate loans. If you look on the NPL, cost of risk is also minus 0.9%, close to 1% in Q1, while in Q4 last year it was plus 1.5 and it was plus 0.8 before. We still very well have a very strong coverage ratio. It even improved by 29 percentage points to over 200%. Now, if we go to the last but not least slide, as a bit earlier described, we have a very strong coverage ratio, over 300% in Q1, on the 31st of March of the current year. If you compare to the end of the last year, slight decrease, mainly because of the increase of deposits. Also on the corporate side, as I mentioned, the current account deposits. If you look on the capital level, it's a strong, sustainable, over 23.7% by March 2024, versus a minimum requirement 16.8. Slight decrease, which we see in March, is because of the difference between Prudential and IFRS, given the increase our loan portfolio, as mentioned before, coupled with some of the increase in the intangible assets, which again, given our strategy, we're investing in the digital products and services. Again, very well capitalized and high liquidity levels above all the limits.
Okay, thank you, Makar. Just before we go into Q&A, just two more important points to notice. So during the quarter, our CEO extended his mandate by at least another 2 years, important sign of confidence. And second point is that the annual general shareholder meeting is on the 19th of June. After the 12th of June, the material on MAIB website. So now we will go into the Q&A. Again, please write your questions in the chat or raise your hand. But in the meantime, we will go to the question that we received on email. It is from a customer citing a specific case. We cannot go into the specific case, but we will still try to respond about the bank overall approach. So the question is as follows. What measures are taken by the bank to ensure customers' right to make informed decisions? Receive a document, email, letter showing the most important services offered on the account and any related fees that you might have to pay in order to compare the cost of accounts operations at different banks. I don't know, Georgi, if maybe you take it or I can answer this question. Up to you.
Maybe you can take out the Q&A the screen. So basically, I mean, depending on the product and services and the customer engagement, I think the principle is the customer at the center, and we transparently share the tariffs that we have in the bank. And we are also open all the channels for complaints if there is a problem, so that we'll listen to it. And by the way, as one of the habits that we've created in the bank is that the very first management board meeting of each week starts with the customer experience review. Of course, that does not guarantee that all the operations goes smoothly. Sometimes there are some disruptions, but we are trying to solve them case by case. I don't know if I'm answering specific question, but then as the question is general, this is the answer that I'm thinking is best.
Yeah, okay. Thank you once again the opportunity to ask more questions on the chat or raise your hand. Seeing that there's none, thank you all very much for tuning in, and hope to see you during our next results review.
Thank you very much. Thank you.